Hello and welcome to Rupee Rakshak News. I am Bijish. Rupee Rakshak News is brought to you from the newsroom of Finmo, a SEBI-registered investment advisor. In today's episode, we will talk about the year that went by and as an investor, what is expected from 2024. We started this year amid fear of whether 2023 is the year of recession. Early in the year, there were anxious talks happening on rising energy prices, high inflation, a global growth slowdown, and there even was a war of words between two biggest economies, US and China. But luckily for us, the pessimistic talks lost its round. We end the year with two ongoing wars, Russia-Ukraine, Israel-Gaza. But despite this, the fear of 2023 turned out to be more manageable than expected. Volatility fell and most major global indices delivered high returns over the year. Sensex and Nifty breached an all-time high recently. But the big question is, what should an investor like you and me expect from 2024? How should we plan our investment strategy? To answer these questions and more, we have with us Mohan Krishna Rao, founder of Finmo and a financial economist. Mohan comes with an experience of more than 25 years in the investment industry. Welcome, Mohan.
Thank you, Vijesh.
Mohan, let me straight away get to the most basic and the most important question. Last 1 year, we have seen a phenomenal growth across all the indices. What do you think are the global and the national macros that are resulting in this huge growth in all the indices across the world?
Thank you, Vijesh. It's been a continued party even after Diwali's. We saw markets rising during Diwali, and the Diwali never stopped for the Indian markets as well as for the global markets. And you have seen Nifty giving about 17% returns, and Sensex close to another 17%, and all the global indices doing exceedingly well. So you asked the right question as what is the macros, what is driving this kind of a phenomenal growth, which was not expected. Basically, this we never expected that this year we are going to see this kind of growth. Let me summarize all these things in about 2-3 points. Firstly, the global macros. If you see, after the COVID, to the 2020, there was a huge fall in the market. And across almost for a year or two, the production was, all the industrial production had almost come to a standstill for 6 months, 9 months, and there was a supply shortage. There was no supply basically. And what happened is, because of which the demand is high and supply is low, across the global markets, you saw tremendous increase in the inflation. And inflation, especially US, it had never seen an inflation of 8%. For an economy which grows at 2-2.5%, having an inflation 3 times high was a big problem.
Absolutely.
Adding to that supply shortage as such, there was this Ukraine attack by Russia, which further added problems of commodity prices shooting up, including majorly by oil. Because when oil prices go up, prices of everything else also goes up. And the problem continued for the next 2 years, maybe 2021, 22. Throughout that, even we expected it will continue further. This is a cycle. The inflation was at its peak across the markets. That's why we saw even Sri Lanka going down, Pakistan get into trouble, all the small economies going to big trouble when inflation goes up even in developed economies because of their balance sheet issues and things like that. Now, what changed in the last year? For the first time, you heard the news that inflation came to a check. In fact, to reduce the inflation, to control this inflation, the central governments across, the central banks across the governments, they started increasing the interest rates. So the government bond yields started going up exceedingly high. Similarly, we saw the FD, which was at 5.5-6% in India, then it went up to 7%, 7.5% bank FDs, because the government security yields went up to 7.5%. Now this was the shift that happened post-COVID. Adding to that was the war, the Ukraine war, which further increased the inflation, and all the federal rates increased continuously over the period of last 2 years, and every quarter they announced that there will be this much of a rate hike. Now for the first time, when the inflation came into the check, the cycle shifted. Now the inflation came to the stop, and because inflation came to the stop, that itself was a big news. So market cheered when there was no further rate hike. In fact, same thing happened in India also, with RBI rate cut, rate hike stopped and rate cut did not happen, but further there was no further increase in the rates. That itself was a good news. Then recently, last month, if you see, the news came in that the federal rates, the Federal Reserve, it said that it is going to cut rates in the next 3 to 4 quarters. That was the biggest news. If you remember the classroom, they teach in the finance classes that the equity markets and the bond rates are inversely proportional.
Yeah.
Every time there is an interest rate hike, the stock markets will fall. And every time there is a interest rate fall, the stock markets will rise. So how this whole thing changed, the cycle came in where we started now seeing that even in India, we expect the RBI to cut the rates in the next coming few quarters, and US cutting the rates is a very big thing. Now, what happened suddenly, all the foreign institutional investors, the FIIs who started pulling out money when the bond markets increased, they pulled out money from all the emerging economies. Now they started coming back with all the money, because there is a very interesting area now. Equities will do well, not the bonds, because the inflation is under check. The rate reduction will happen, which will automatically fuel. The rate cut means corporates will get loans at lesser rate, which means the corporate earnings will be very high. So they will spend more money for establishment, capacity utilization and things like that, which will further expand the growth for these companies, which is the reason for equity to rise. In fact, if you see in 2021, the FIIs pulled out most of the money from Indian markets. In 2022, they didn't do much, and most of the money was in bonds. And 23, if you see, phenomenal comeback. If we see in the last 3 months, the amount of money they have, actually loads of money they have put into the stocks. That is why you are seeing this rise happening. Not only that, particularly the IT companies and the pharma, which is facing the export markets, they are the ones which will benefit from any rate reduction in the US markets.
Right.
So that has also fueled, and basically macros, there were 3 things. One, there was a rate hike, inflation was very high, and even though inflation was very high, the GDP was not growing. It's a big difference between India and the world. The world over, even today, the GDP is not growing. Where it is US, be it UK, be it China, China is further degrowing. Only place where GDP is also growing is India. So if you consider 3 points, the first point is the inflation, second is the GDP, third is the fiscal deficit. Now the first point is let's talk about inflation. Now inflation is under control across. GDP, if you take it as a second parameter, it is only growing in India, but it is not growing anywhere else. The third most important thing, the recent news which came in, that fiscal deficit, which was 3.5% of the GDP in India, the last month the report came that it has come down to just 1%. Now if you see, if you simply Google, in my screen I would like to show the fiscal deficit. What is a fiscal deficit in US? The fiscal deficit in US, as per the Google reports, increased from 5.4% of GDP in 2022 financial year to 6.3% of GDP in 23. In US, the fiscal deficit is increasing. In India, it came down from 3.5% to 1%, which is a substantial positive news, because fiscal deficit is the key. It talks about the stability of the country. Now, 3 things going right for India. First, inflation is under check, GDP fastest growing, and fiscal deficit narrowing down. What does it actually mean is India is expanding, Indian economy is expanding at a pace much higher than rest of the world. And for which reason also equities in India are doing exceedingly well. So on the other two, on the global front, it's only one is positive for them. GDP is not doing well, fiscal deficit is very bad, but just a good factor is inflation is under control. So there is a rate cut which is going to happen. So that is the only reason why US markets are cheering. But India news altogether, because in India we are seeing substantial growth and it is just started. It is not going to stop. Maybe another 5 years, 10 years, you are going to see substantial flow of capital to India. All of FIIs, everybody will queue in to put money, because everyone, just like you and me, we will put money wherever my money is growing fast. So India is growing fast. Everyone, believe me, will come in here in the next 5 years. Our markets will hit the roof.
This was about 2023 and it was great. What do you think 2024 will be?
2024, Bijesh, is going to be a pretty challenging year, for the simple reason that normally what happens when you have one big year, if you see this 2023, Nifty has done 17 to 18% return, and the mid cap, Nifty mid cap has done close to 43-44%, and the Nifty small cap has delivered 53%. So this is a big year. Now, normally after a big year, you will not have the second year, next year will not be very big. You should expect naturally the next year to be slightly muted year. So 2024, for the simple reason, the logic that 23 has been very huge, so you should expect 24 to settle down. So don't expect beyond 8-9%. If you get, you should be very happy in 23 in equity, 24 in equity. But coming to this, you also know there are major events in 2024 that April, May, India is going for central election, central government, and of course everybody expects the same government to continue for the third time, but we do not know. It is democracy. Anything can happen in democracy, like the cricket match. So you all know in the World Cup we were expecting that India will come up, every match we won and the final match we lost. It's possible. I mean, I don't wish for it. I wish the same government continue. As far as markets are concerned, it is good for the markets and for the investors. But what if this does not happen? So there is going to be a factor of that. So people will be cautious. If you see the last 3-4 years of analytics during the election year, how the markets perform. Usually markets tend to fall because of the uncertainty a month or 2 months before the elections. And after the elections also, if it's an expected result, you will not see much of the movement in the market. Because normally everyone should understand one thing, stock markets always play advance. What is expected to happen after 6 months, the price will start moving today itself. So that being the case, already everything is factored in the price in the current market's high. So if you expect that something is going to happen great in the market, so I will invest now currently from 72,000 level Sensex. If you expect it will go to 85,000 or 90,000 in the next year, you will be daydreaming. So it's not possible. So you should expect that it will not do exceedingly well, and you should ideally look at if you have already invested in the market, it is better you stay invested, not that you should book profits and pull it out. But there is, other than the election and the geopolitical thing which is existing, the political stability, not much of a risk as far as India is concerned. The macros are looking great, but you can't expect market to go up every year by 20-30%. So if one year it has done exceedingly well, you should expect it to not do exceedingly well in the second year also. But 2024 alone, if you look at it, it's a different thing. But if you ask me what it will be in the next 5 years, I will tell you, if you are an Indian, you should not try to make money anywhere else in the next 5 years. Whatever money you have, go and buy the best 5-10 stocks, put your money. Whatever you have, just put it in the stocks. You will get unbelievable returns in next 5 years. Don't worry whether this year no election, nothing you need to worry about. If you are looking at 5 years, there is no better time than now to just keep investing, keep on investing. You will be getting unbelievable returns in the next 5 years.
Mohan, what according to you are the 5 key sectors that an investor should watch out for in 2024?
The key sectors, Bijesh, let me show you in the screen. We keenly follow these sectors wise as well as the theme wise.
Right.
So, if you see on our Rupee Rakshak platform, we have already selected the best of the stocks in every segment of the market, be it a sector, be it a theme. So, let us see which are the best performers, which sectors have been the top performing sectors in the last 1 year. So, if you see together, in fact, best India defense, the defense sector has done 94.6% return
94.
in our portfolio.
That's phenomenal, Mohan.
And second best sector has been the public sector stocks. The public sector stocks have done 74.96%. And in the third place is the reality stocks. The reality sector has done 71.75%. Now, the fourth place is the technology IT stocks, which has delivered 57% returns, and the auto in the fifth place at 54%. Now, imagine it's a Make in India that is doing exceedingly well. The industrial output has increasing and lot of activity at the industrial space, particularly in the defense. Same way public sector stocks. See, before the Modi government or before 5 to 6 years back, if you see the track of public sector as a segment, it has always given negative returns, and none of the FIIs have very seriously invested in public sector. Today, last 1 year, if you see the huge change in the view on public sector stocks, 74% return on in public sector stocks. It talks that this is a new story. If you see last 3 years, 5 years return, it is in 5%, 3% in public sector. This has just started yesteryear. This year only it has started.
Yeah.
It is not going to stop. And you should not ignore public sector, and particularly the IT stocks. If you are asking about 2024, what should you look out for? On the theme side, defense is looking exceedingly well. It is likely to do well. Of course, the wars are only going to increase. We had Ukraine, Russia, now we have Israel, Hamas.
That will not be good for the market.
And we don't know when, around here in Asia it will start with Taiwan is under, Vietnam is firing, and a lot of things we have, sensitive things that are happening. So, the defense is always going to be the best sector in such a scenario, and public sector, of course, it is booming, and reality is last, if you see, particularly reality, it has broken out 10 years return.
Yes.
Reality has not performed, the best performance was only in 2008. Now we are seeing exceeding breakout in real estate stocks, and you should not miss out in 2024. IT stocks, I was talking about the rate cut
cuts.
that is happening Federal Reserve, and that is going to benefit a lot of European companies to expand. If European companies and US companies expand, particularly the techs, it is Indian IT industry which will make most. So, you should not miss out the IT as a sector. Of course, auto, particularly the electronic vehicles, the electronic vehicles, EV segment particularly, you should not miss out that for 2024, and also the metal stocks, the commodities, infrastructure. These are some of the few names, but you should be very careful. As I said, markets have already oversold position. It is in an oversold position. So, you should pick it correctly. When everything is going up, the dirt also comes up.
Absolutely.
So, you end up actually getting into some dirt. So, you should do the right analysis and pick up the right stocks. And 2024, banking and finance is my #1 position that I would recommend. Don't miss out, because not only for 24, since economy is on the boom, if every sector performance is captured by banking and finance. So, banking and finance is my first option. Second is the IT, reality, and you should not miss out the public sector and the auto stocks, which are doing exceedingly well. These are my 5 top picks for 2024.
Lastly, your advice to the investors. What do you think? How should they go about planning their strategy, the investment strategy for 2024?
Thank you, Bijesh. This is something that a lot of people would ask. What should I do in 2024? Should I invest in equity or not? Because already markets are at the peak.
Yeah.
And will I make money further if I invest? See, 2024, the equity markets, if you're looking at, because there is a pending election and also there is an uncertainty around the elections, so you should be careful of putting the lump sum investment into 2024. So you should wait for the dips. Whenever you get an opportunity, you should invest. Otherwise, it is ideal that if I am an investor, what would I do? I would rather put all my money into the fixed income instruments. See, today bonds are offering anywhere between 7.5 to 8% returns.
Yeah.
So even if you buy government securities, you get 7.5, 8% return, and when the rate cut happens, you will also see that the bond prices will go up. So what you may make a capital gain out of that, because in next 1-2 years you will not get this kind of a bond offering. So you make 7.5, 8% right now, 7.3% kind of an yield that you are getting in a government bond. If I have a substantially big amount of money, I would rather put most of the money into government securities. And if I want to really buy some stocks for 3-4 months or 6 months during this next 12 months in 2024, I would rather take some leverage on the government securities and buy the stocks but not sell the government securities. Probably when I see something really interesting coming through, because already 2023 has been phenomenally very high returns on the equity, I would rather play the diversification, move majority of money into the government bonds, get a fixed interest of 8%. Because I do not expect the equity markets to do more than 8-9% in the next financial year. Because once the excitement of election, everything is over, then comes what is the next trigger. So you will not find one after the other triggers for the markets just like that. So after normally a natural big run, you will always see a stunted growth. So if you can make the same 8% in a fixed interest in instrument, it is better I would be there and not miss the equity opportunity. As and when we get, I can always use a leverage on my government securities. I can get money on my government securities. Let's say I have parked some 20 lakhs, 30 lakhs in government securities. I can get 5-10 lakh rupees leverage on that. The brokers will provide you all those things, and you can use that borrowed money around 5-10 lakh rupees that you can invest in stocks. But don't go overboard on stocks just because everything is going up. And 2024, you need to manage it carefully if you are a retail investor. Now, if you are looking at long term, then all that whatever I have said, please forget that. Just invest money. Don't time the market. Just invest money and wait for 4-5 years. You will see phenomenal returns. And whatever we have seen, the markets going from an average of 17,000 level to 21,000 level, this is not the real story. This is just a trailer. You will see the real picture coming out in the next 4-5 years when the GDP starts getting into double digit.
Yeah.
You should not miss that rally. Now, if you are a long-term investor, make sure that you are there in equity markets. No other asset class will give you this kind of a return in next 5 years. Take my words, I'll also come back in 2028, 29 and talk about how it performed, but that time probably it will just be numbers for you. If I say you would have made 300% return, 100% return, 250% return, if you are not present in the stock market, you will still bad like what I said today, 94% in defense stocks. It is only a paperwork for you, but for someone else, it is actual money that they have made. So you don't miss opportunity for next 5 years. If you are a long-term investor, put money into stocks. Does not matter whether it is high or low. Just stay invested for 5 years. You will see humongously huge returns in next 5 years.
Thanks a lot, Mohan. This was a very insightful discussion. Wishing you a very happy new year.
Thank you, Bijesh. Wish you a very happy new year.
Thank you.
And to all the viewers, this is a very interesting year, 2024, and I am excited what is coming in this year, and wishing you all a very best of 2024.
I'm sure this conversation is going to give a lot of clarity to the investors and help them take the right financial decisions. That's it for today. We will now see you next year. Wishing all the viewers a happy and profitable 2024. Thank you for watching.